Hi there, this is Kris from Movement Mortgage.
I'm Sam St. Louis with Allied Realty Group.
Oh, and we are here today to talk about what is going on in the real estate market. Wanted to tell you what is new and exciting coming aboard. President Trump is expected to sign the 21st Century Road to Housing Act into law. And while it's not going to change your interest rate at all or be approved this week, it does start going to tackle on some bigger issues as far as what's going on with the housing supply.
Sure.
So if you heard what was going on, more smaller loan options. So lenders may start offering lower dollar mortgages, making it easier to finance lower priced homes. If we find lower priced homes.
Right. Yep.
Another thing is more housing types. Cities are going to be encouraged to allow for things like duplexes, triplexes, and they call them ADU units, which are accessory dwelling units. So that's like if you have a house on some land and then you want to build a little house out and back for maybe your parents, they're encouraged to allow that to happen. So basically, it's more ways to create housing.
Right.
The faster construction, the goal is to cut the red tape so builders can actually build quicker. A lot of times there's a lot of red tape that they have to cut through as far as for getting permits, and sometimes it could take longer to do that.
Sure.
Which is good there. And then use of unused land. Cities are going to need to identify public land that could be used for housing. So there are probably a couple different places around the area that we can kind of identify that could be used for possibly housing. Being built. Another one is less corporation competition. What this means is large investors will most likely be restricted from building single-family homes, meaning less competition for everyday buyers.
Oh, okay.
Yeah. So that is kind of what is in the bill. Now, here's the thing. This is not a quick, easy fix. It's going to be aimed at increasing the number of homes available and reducing investor pressure. And over time, that could make buying home a little bit more realistic.
Yeah, definitely. Because I think with the market being the way it is, I mean, it's really crazy. I did a talking head video last week that Horicon, their market is hot. I mean, a house goes up for sale in Horicon, it's gone. I don't know if it has to do with the whole schooling situation in Hustisford, but I was amazed at how quickly they're moving over in Horicon. Dodge County in general, we still have a shortage of inventory, but that'll be interesting to see how that kind of all plays out over time.
You know, it's interesting that you say that. We're talking about Dodge County in Wisconsin, that anything in Dodge County, I think under 250 is hard to come by.
Oh, yeah.
And if it is, there's there's a lot of competition on those homes.
Yeah, agreed.
I just seen one that was for 160. It'll be interesting to see what that sells for.
Yes. But then you have to be careful as well, because in 2021, maybe when it got real fierce, they're going, X amount over asking price. But then it's like, then we get to the lender part, and like, what if it doesn't appraise out? Then we're, so that'll be interesting to see.
So as time progresses, we're going to report back to you on that. We're talking about in Hustisford. For those of you that don't know this, that Hustisford, their referendum did not pass, and therefore they are shutting the school system down. And I think it's even going to be shut down starting the beginning of this year.
Yeah, they're done. Yeah.
So they're going to be dispersing all the kids to the different area local schools?
I believe so. They have it split up in like 4. That's just what I've heard. I don't have a kid over there, but I've heard it was like Hartford was one, Horicon, Watertown, and possibly Dodgeland.
So it'll be really interesting to see and watch values in the area for the coming future and having that happen.
Okay, so here was a big question that I had. So recently I have had a couple homes that I've been the buyer's agent on, and now very serious buyers, we wanted to make sure that our offer got accepted. So they were offering a large chunk of earnest money and what I was taught by, when I first started was like 1% to 2% of the asking price was pretty average. But this one in particular was a very big chunk. Now, so when it's a larger chunk like that, do you recommend asking the lender first before you all of a sudden see $15,000 disappear out of your bank account?
That's a great question, because in essence, earnest money as a lender, we have to track where everything comes from. And if you think of it, this is where buyers can get in trouble pretty fast. We want to kind of be aware of it. If you think of it, earnest money, when you put in an offer, it tells you, I'm serious. It's like, I'm serious deposit that, yes, I do want your house. And typically that's held in a trust account, correct?
Yep, correct.
And everything. So what people don't realize is us as a lender, we have to track in where all those funds are coming from. But here's basically a simple breakdown you can use. You can use your own money, checking, savings, the boring, safe stuff, right? Typically, they're going to either want a check, a cashier's check, or even now probably an auto payment. In essence, we can see where that money comes from. It kind of flows out of your account into your account. And then if you think of it, the earnest money will go towards your down payment or funds that you have to bring in for closing, and that will be credited to you. Gift funds from family members. We can actually use gift funds, but again, we have to track that in and we have to source it and documentate it, of course.
Right.
And in essence, funds that are already sitting in your maybe IRA, 401k accounts, any other type of investment accounts, again, it can come from there. Again, we just have to documentate it. It has to be seasoned money, meaning it should be sitting in your account for at least 60 days. Here's the thing, what you can't use, and again, don't try to sneak it in because we will find it. Cash under the mattress. I'll never forget the one time I got an offer in, and then they sent me the earnest money, and it's 5 $100 bills on a copy machine. Here's your earnest money. And I'm like, I can't use cash. As much as we all love cash,
Right.
We can't use that as far as for source of your earnest money. Random Venmo transfers. I'm not able to use Venmo at all. If from a family member, okay, we just have to track it in. And again, unsecured loans, or, hey, my friend lent this to me, and or cash advances on a credit card. I can't use any of that at all. So if you think of it, I just have to paper trail it. And, if you think of it, underwriting gets pretty cranky if I can't track it in. And I'd rather find out now, because if I have to have a conversation with you afterwards, you may get cranky. And that's the last thing we want to have happen, is anybody get upset on that. So, before you move money around, talk to myself as a lender, or the lender that you're choosing, as far as how should we handle earnest money, and have a good conversation on that.
Sure. And then, so what about a gift? Like, my grandma gave me $100,000. How do we, that's not really earnest money, but how do you handle that as part of the process?
Sure, we can get gifts from family members. Certain loan programs allow for non-family members to get gifts, so we need to be very specific. So if you think of it, we just need to track and where all those funds are from. An easy way of doing it is, in essence, showing proof of that, and then in essence have the donor send it directly to the title company.
Sure.
And then we can track it in that way. Of course, we have to get gift letters signed, and the gifting part, that stays within us. As far as our file, we don't release it to anybody, such as the IRS or anything like that at all. So gifting can be done.
Yeah, perfect. Yeah, I always had to ask, because it's like, well, yeah, what if I make tips as a bartender or a waitress? Yeah, what am you can't take cash. So what do you recommend? Like, if you do have somebody who kind of has a little bit of cash they're stashing on the side, do you recommend maybe like small, consistent deposits, or?
Absolutely, because if it's sitting in the bank, and again, when we call it seasoned funds, it has to be sitting in your bank account at least 60 days.
Sure.
So we get it. We totally understand, as far as for certain industries where you will get, cash deposits.
Right.
Let me do that over again. We do understand certain industries where you do make cash. So then, in essence, we just have to document it accordingly.
Sure. Very interesting. Cool.
So thanks for tuning in today. This is Kris Weniger from Movement Mortgage.
And I'm Sam St. Louis with Allied Realty Group.